Finding a balance. So now we're at the end of the program. You should have a lot of knowledge, and I really tried to give you my experience in the markets. Now you need to know that once you start trading with real money and even maybe make it your main job, you need to find a balance, okay? And many people fail to do that. Due to fear. And for example, a lot in crypto traders, they've got their wallets, okay, on their phone, which is usually only it regroups all their cryptocurrencies so they can look at it, but they can't actually buy or sell from the app. All right. However, I see them every 30 minutes checking their phone. All right. See, oh, my portfolio went up 100 quid. Oh, my portfolio went down 200. All right. Okay. Now the thing you need to understand is why would you do that? Okay, there's no need because basically you can't act. So it's just looking for the sake of looking. Okay, you're just losing time. So your activity in trading makes you busy but not productive. Okay, in trading you need to be productive, not busy. All right, and that's how you get basically the lifestyle of being totally free. All right, if you spend the whole day checking, well, you've got no time to do nothing else. All right. So the first thing is to know that not every day is a trading day, okay? So you need to find good opportunities, all right? And so what I do, okay, to find my opportunities is you see I've got my, you can make on TradingView some watch lists, okay? So create a new list. I could create something new, save list, import, etc. So flagged list, I use that for my setups I've got, okay, or trades that are running on my accounts, right? To see how they are performing and to look at setups, okay, quickly. Priced, which is basically all the currencies I've analyzed already, okay, so I've got all my major support resistance, all of that, mainly on bigger time frames such as the daily or so. Then I've got my commodities, then I've got cryptos and currency index. So that's all the dollar, the euro, the yen. I recommend you to do that as well. Okay, so you can have quickly a look. Okay, let's say I can look at euro and see what is the euro doing. Aren't really traded apart from DXY, which is the dollar index, which is traded a lot. You can see there's rarely gaps because it's traded that much. And you can basically see, so you can see I haven't really analyzed this thing properly because I didn't look at it recently, but you need to know what the dollar index is at and how it moves basically, because if dollar index goes down, you know, dollar so will affect the forex market. Now I've got Forex. Basically, for my Forex is I've put every currency pair, okay, available, every currency pair available. So what I can do is simply click on the first one, go to the 1 hour, let's say, okay, because I like trading from the 1 hour and the 4 hours. So let's say I'll go to the 1 hour, and there, simply on clicking my down arrow key on my keyboard, I could look at all the different setups, okay? So this is totally choppy, there's nothing I see quickly. So I'm really used to it, okay? My eye is used to seeing patterns, seeing things. So I can be quite quick. And yeah, so do that, and then when you start doing it, you'll suddenly see a head and shoulders pattern and think, oh, okay, probably maybe a trade there. You see resistance, okay, with the divergence, right? And then you'll go into deeply and analyze that pair to see if it's possibly a trade. And if it is, and you're just waiting for a breakout, you'll put that into your flagged list, okay, just by flagging the currency pair, all right? So not every day is a trading day because so you check the markets like that. But if there's no opportunities, well then trade, all right? Not every day is a trading day. You need to get that right, all right? Now the second mistake people make in finding a balance is constantly checking, all right? So let's say you're on a position, and every 10 minutes you check to see if you're in profit, in loss, okay? Especially when you just open the trade, okay? You just open the trade and you constantly check. How is it going? You need to ask yourself, listen, if I open the trade and suddenly it goes into a loss to halfway to my stop loss. And so I check my phone and I see this. What happens? Would I change something? Would I close my position? No. Okay, I wouldn't do nothing. So why check? Right? If suddenly the price went a bit my way, okay, what would I do? Nothing. Right? So you need to ask your question when you're checking. Why are you checking? Is it only for personal satisfaction? And so you're just checking, which is not good because you get that habit, and then you're constantly checking. It's like people who always check their emails and they haven't got any new emails in. Okay, so that's useless, and it's not good with finding a balance. Okay, you need to find a balance in trading, and be just calm and know what you're doing. So always ask yourself, do I need to check? And if I check, when would I change something? Okay, so that. Um, Now, instead of checking and things, what I usually do is set alerts. All right. So, for example, I'm looking at copper here. So, I've got my confidence in reasons for me to trade this commodity. All right. So, obviously, I talk a lot about Forex, but as you see, I've got Forex and commodities, all right? Because basically what I'm teaching you in the program works for commodities, will work for Forex, will work for stock market as well, all right? Stock market as well, okay? So with companies, the only thing changing is that I showed you all about the Forex calendars and the news that affect the Forex market. On stock market, it's different. It's all about the earnings, dividends, news of that specific company, okay? So it changes a bit, but it's sort of the same basis. So I tend to trade commodities as well. So yeah, so I'm looking for copper, and I'm looking for it to break that neckline. All right, I'm looking for a break. So what I could do is obviously stay in front of my computer the whole day, just waiting for that to break. Okay, or look, when you're here, you've got that little plus button, click, and you can put add alert. So that's what I did here. Okay, you can see I've got an alert when copper crosses 2.781046. Okay, so whenever price reaches here, I could put it a bit higher actually now. My computer will start ringing and putting an alert, and I will receive an email as well. Okay, saying copper just crossed that price. So instead of always checking, I could put alerts like that. I'll do this on all basically my setups I'm waiting for, or even in a trade in close to target or so. So I could always, maybe if I see my trade really close to my target, close it manually, okay? As I said before, don't be a dick for a tick. So if it's really close to your target, close it, all right? Then the fourth thing is you need to recognize when markets are crap to trade, all right? So basically, the way I'm teaching you is trends trading and also swing trading. Okay, that's what we're trying to get. We're trying to get swings, all right? And if it turns out to be trend, we will try and ride that trend, okay, with risk management and putting our stop losses. Now, sometimes, especially during summer and around December, forex markets aren't great to trade. So why? It's basically in summer you've got many traders just go on holidays, okay? So markets are less liquid, and so trends don't tend to stay a long time because there's not enough move and enough traders behind to push the price higher or lower, okay? And so markets simply tend to react a lot to geopolitical news, okay? So markets will be sort of flat and will only move when Trump says something or there's a news, all right, which you can't really predict. So in these cases, it's not good to trade, all right? And don't be afraid not to trade for 1 week or 2 weeks, okay? That's what I did in beginning of July, end of June, okay? Trade for 2 weeks, all right? Weeks, why? Because markets were crap, all right? I made a few losses, then checked that the markets and markets were crap. So why trade it, all right? You need to preserve your capital. And that's why many traders lose sometimes, is that they overtrade, and when market is bad, they just force trades and everything, and they just lose all the money they've made before, okay? So what I mean by that is, I think we had a good example lately. So I told you lately I didn't trade. Let's look at that. Yeah, right. So yeah, simply look at that, all right? here doesn't look too bad, but it's in a range. But the range is very choppy, all right? You can't see nice price actions. You can't see any head and shoulders. You can't see any wedges. You can't see some nice flags, okay? It's all really choppy. So yeah, there's sort of a resistance and support, okay? But markets are so choppy, they're not good to trade, all right? Because you could enter a trade and be right, and it simply your hits your stop loss before going to your target. All right, so markets have been really like that lately, and so you need to recognize that. All right, you need to recognize. You see this example? Didn't enter that trade, um, but yeah, just look. Markets are just making erratic moves. Um, so yeah, so you need to recognize these periods and don't trade them basically. Okay, and so I haven't traded for 1 or 2 weeks, and now I'm back in trading because markets are sort of behaving a bit differently, okay, and starting to show some nice price action. So that's why I'm back into trading. So yeah, so this is how to find a balance into your trading life. Having a trading journal. So having a trading journal is important in the sense that it will help you to evolve and become a better trader, okay? Because we learn from our mistakes, all right, as humans. And also, I was talking about loss aversion in the psychology section, and basically, a trading journal will help you to deal with that loss aversion effect, okay? So let's go to Microsoft Word, and I'll show you how I keep my trading journal, and so how you can keep yours. Okay, so this is what a trading journal looks like. Um, so I used to have a trading journal with probably 60, 70 pages that I so sadly lost when my old computer died. So this is sort of a new trading journal I've got, and I don't keep it up to date that much because I'm really busy, but I definitely recommend to do it, especially for your losses, okay? So this is how I do mine. I'll basically do one template, okay, and then copy it every time, all right? So I'll show you. So you can see that was for June. It was my losing streak. That's why I did it. Okay, I had a losing streak in June. Those who've been following me on Instagram know it. Okay, I finished the month at minus 2 or 3%, if I remember correctly. So not a massive loss, okay, but still losing month. So yeah, so I'd keep the date, okay, Thursday. Keep the date up here. Then the currency, right, with which position I was, short or long. And the +4, I only put it when the position has been closed, okay? So I won't put it first. Then I'll put what time frame I was looking at when I opened the trade, okay? So the time frame right on TradingView. So 8-hour chart, my risk to reward when I thought of opening the trade, and how many pips my stop loss was at, all right? Then I'll put how many reasons I had to trade. So this is my conferences. And so this will help you as well when you do your trading journal to see if you're respecting your trading plan. Sometimes you'll do your trading journal and see, oh, well, actually, I only had 2 reasons to trade. Right. So you could see which trades were respecting your trading journal or not. Right. So 4 reasons to trade: broken trend line retest, resistance, trend line, SMA, double top. Okay, different reasons. Outcome: I took profit at first target and did well because yen crashed after. Okay. So there, in the outcome, you can basically say what you did and why. And so going back to your trading journal, you could see all that, okay? And what could I have done better? Nothing for this trade. It was a nice trade, all right? And so here I've got a screenshot of my trading view when I opened the trade, and a screenshot of my trading view when I took profit, okay? So how you get these screenshots, it's basically on trading view. Okay, let's imagine that's trading view. You've got a down here, you've got a little camera button that you click and it will give you a link. And basically the link, when you put that link on your computer, it will give you just an image of your chart. So what I usually do, for example, when I send charts, is I click on that camera icon, get the link, send it to me by email so I can open it on my phone, and then on my phone I just save the image, all right? So yeah, so definitely put images of your entry and your exit because this is very visual and you can see why you lost or why you went into profit or so, okay? So for example, this trade, okay, this was all my reasons. Got stopped out quickly during the night, many geopolitical events, okay? That was when there was nuclear threat, all right? And basically, I couldn't have done anything better on this trade. It's just part of the probabilities, okay? I've got a probability that says I'm 70% right, so there's trades I will be wrong, all right? However, let's look at that trade, for example, all right? Here, so I've got all my reasons, okay, all the same. And so basically, okay, once you've done this one, you just copy it, paste, and just change the charts, change the numbers and things. So that, what could I have done better? Could have waited for the break of the SMA 50, all right? Totally true. Look at that chart, all right? I shorted it, and the SMA was just below, okay? So that was a mistake, all right? And not really a mistake, but it's something that caused me to lose that trade, all right? So I write this on my trading journal. So next time I see a setup similar to this, I will wait for a break of the SMA, all right? Same with this. So you'll see a lot on my trading journal. Look at news and manage positions because that's probably the main reason why I lose on the market. I have losing trades. I mean, it's that because I'm often out of the house and things, and just just out. I sometimes forget because I'm having fun and forget to check the news, and so forget to manage my positions. Okay, so always write this. All right, look at that. Manage position during major news. All right. Yeah, I got fucked only because of that. Remember, that's all about managing risks. Okay, and before news, remember we put our stop loss just under the price. So if the news goes in our way, great. If it doesn't, we cash out. Okay. So yeah, so that's so I had this one from June because I had a losing streak, as you see. And so yeah, it's really important to keep a trading journal. It will help you a lot, okay, in seeing all your mistakes and acknowledging them, okay, and will stop loss aversion of you just forgetting about these losses, okay. And remember, so to write your profits, okay, but also your losses, all right. Also your losses, they are the most important because what keeps you back is not your profits, it's your losses, obviously, okay. So very important, and just write everything, okay. I don't do it, but even write your confidence, all right, before opening a trade. For example, here, let's say I've got 1, 2, 3, 4, 5. So that's the typical end of a trend, plus a double top. Yes, I had fib levels, resistance, a trend line break, divergence. Didn't write it, but a double top. So that. So maybe if I had put my confidence, I would have put 95% sure this trade will go. And what happened? It didn't go, okay? So it's also nice to write your confidence to see that you can't be 100% confident in the market and you shouldn't follow your guts or your how you feel, okay? Trading is all about facts, right? And it will actually help you in real life because in real life you'll stop putting emotions into what you're doing or even in your relationships and things and only look at facts, all right? That's the most important. You've got these facts and do accordingly, all right? As a good friend of mine says, um, investing is not an action, it's a reaction, okay? And you're basically just doing something because there was a few things that happened, all right? So yeah, so that's how to keep a trading journal, and I really recommend you to have a trading journal, especially at the beginning, to keep track of all your trades and see why you lost.